How are you?
Very, very well. Thanks for having me.
Big week, FinTech week?
Big week.
What was the big thing?
First of all, I think it's fantastic that Hong Kong is making such a big push in FinTech. And for us in particular, given this is in many ways the heart and soul of the bank, and this is where we've launched our most cutting edge digital bank, Mox, which I'm sure we'll talk about, to have a chance to both celebrate that, but forget about the celebration. Now let's move straight into what we can do from here to continue to build on this set of tech capabilities, FinTech capabilities, develop our FinTech partnerships, which is a critical part of Mox and everything else that we do in the call it the new banking space. It's a fantastic opportunity to bring it together, and of course I'm delighted to be here in town while it's all happening.
Right, you and I were talking during the break. I bank with you guys as well. Yeah. And so I'm curious, and I'm sure a lot of people are wondering as well, what is the difference? There's a virtual bank, and there's a bank like yours that has a significant and extensive offering of services on the app and online. So what's the core difference, really?
Yeah, it's a really good question, and there's a lot of different ways to think about it. So at one level, a virtual bank is that which the regulator has defined. So in Hong Kong, the HKMA said, we're going to have a different kind of banking license, which is a digital-only license. You can't have branches, right? So that's the rule. And we're going to open it up to different types of people. They said a whole bunch of other things, like we're going to hold the digital banks or virtual banks to the same standards as we hold conventional banks, which, as far as I can tell, they've done in every regard. So that's one distinction is just a regulatory allowance. But even without a regulatory steer, many people have set up digital banks of their own accord. And there's several, obviously, around the world, the UK, Germany, elsewhere. And there, I think it's intended to target a population that is happy with a digital-only experience, usually a mobile phone-only experience. So in many cases, not even accessible on a desktop or a desktop of one description or other. And that's it's to have a mobile-only banking setup is cheaper. It can be more streamlined in terms of the user experience. It's cheaper to maintain. So, and if you're targeting a millennial audience that's only interested in banking on their phone in the first place, why create all the capacity to access on a desktop, much less branches? So I think some people have set up standalone digital banks entirely off their own bat, nothing to do with regulation. And then, of course, most banks, I would say virtually every bank at this point, has digital offerings inside and alongside their conventional offerings, as Standard Chartered does in every one of our locations. So, for example, in Africa, we've launched 9 digital banks in 9 different countries. In all of those countries, we have a branch operation alongside the digital bank. But in some countries, so let's take where we started, which was in Côte d'Ivoire, Ivory Coast, we have a single branch. And we had no meaningful retail business beforehand. And we built a digital bank. If you want to, you can go into the branch, you can go to the teller, you can get advice, you can open an account, but you don't have to. You can do it all on your phone. Whereas Kenya, at the other end of the spectrum, we have an extensive branch network. And the digital offering is really sitting side by side. And we think that for many customers who might do 99.9% of their banking online, and they're perfectly happy to use a mobile phone, they'd like to know that if they need to, there's a branch that's convenient. If they need to make a cash deposit.
Yeah, I can see a teller when I need to see a teller.
Yeah,
almost.
Or get some advice, or I need to. I'm having trouble with the app, right? or whatever. So I think there's a full range of.
That takes me then into the regulatory sort of framework. I can imagine it's maybe a bit of a headache because it's also a moving target for regulators. And the reason I bring that up, this week we should have seen the biggest IPO ever that got pulled because of regulatory concerns. Do you think because this is such a new space that the risk is over-regulation?
I wouldn't say that's the risk right now. Look, if you ask the question, is there a risk that banks are over-regulated? I'll say yes, no question. And virtual banks, in that sense, could end up no different than conventional banks. Now, I think that the regulation in Hong Kong, for example, is every bit as rigorous in the virtual banking sector as it is in the conventional banking sector. Now, the virtual banks are offering fewer products, at least at the outset. So that means that the interaction is probably less. But I'd say the focus on making sure that the treating customers fairly, that the way that we're dealing with financial crime compliance and other compliance, account opening processes, things like that, are the same. And I think in most markets, they'll continue to be the same. Obviously, in China, the big tech companies, Alibaba and Tencent and WeChat, they set up early and they moved pretty quickly into banking space, with which, this is years ago, at a time when the thoughtfulness around non-bank regulation was at an earlier stage. So it's not surprising as they become big and very prevalent across the Chinese consumer market that regulation is catching up a little bit. And I guess from what we've seen out of the regulators in China, that they will take some actions to try to align a little bit more the non-bank sector with the banking sector.
And you have no plans of dipping your feet into the virtual banking space in China, just since we're talking about it?
There are no. I think maybe there's been one virtual bank license granted, but perhaps the bank hasn't been activated yet, and it's a joint venture between between two Chinese entities. We have an extensive digital operation in China, off the main bank license. We have a particular focus on wealth management, where we've got a market-leading app for wealth management products in China, where Chinese customers can buy either local fund and investment product or international. Of course, there are still limitations on how much international product a mainland customer can buy. But that we would take every opportunity, either alone or with a partner, to expand that if we could get the regulatory permission. So, as you know, in Hong Kong, we partnered with PCCW, so Hong Kong Telecom, FWD, and Trip.com. And we did that because we wanted to have a broader set of user experiences and a broader catchment area for customers. And we've been extremely happy with that partnership. Could we do something like that in China at some point? Absolutely.
Singapore? What's the plan? So I know you're looking to have one in Singapore. What's the do you have an update?
Not really. I mean, we would. Of course, we have very active discussions with the MAS, the regulator in Singapore. We would love, at the right time and the right way, to have a digital bank license. We would almost certainly do that in partnership with a strong local partner, and we would use the technology and the experience that we've gained from Mox in Hong Kong. And we would do that because we're really happy with the way Mox has landed. It's getting very high ratings in app stores, very good customer feedback, very strong account opening numbers, and those accounts are being funded, and people are using them to pay for their purchases. So we're really happy with how Mox has landed. That feels like a pretty good starting position for a Singapore bank, should we get one. But that, as you know, in Singapore, the MAS has not yet granted any digital bank licenses. Right. We would certainly hope that we're in there in the first batch.